Oh, I don't know. Not live in California for a lot of reasons. But if worse comes to worse and you have to stand there, you stand in the doorway. It's the safest place. Economically speaking, that has always been gold. It is the refuge and the safety net from inflation. Well, let me show you how this progression works. And you tell me where we are. Stocks is where everybody really has always been. When things are going well, you're in stocks. There's bonds, there's real estate, there's treasuries, then there's gold, then there's insanity. The farther people move from gold, the better it is. Okay? The closer you get, the worse it is. Here's the general thinking. When times are good, you're in stocks. People are putting their money in their 401ks and their mutual funds, and everybody's okay, and their 401ks are stable, and so stocks are good. But as things start to get, unstable and a little dicey, and you start to feel, maybe an earthquake is coming, like 2 years ago, stock markets tanked, and people lost half of their money, and now we're on a roller coaster with the stock market. Where did people go? Well, some people lost everything. Some people just pulled it out and just hanging on it. But people with money, they went to someplace a little safer. They go to bonds. Maybe you're in Connecticut State Treasury bonds, which are so stable. Or you invest in a company. Now, what are bonds? Well, bonds are always safer because if a state or a company goes broke, the bonds are the first to get their money back, because these are people who are big investors. You're gonna invest in GM, and they need $100 million. Okay, I'll step in with $1 million and buy $1 million of GM bonds. But the agreement is that I get my money first. I'm the first. If it goes bankrupt, the bondholders get their money. That's contract law. It's always been that way until Barack Obama. GM and the unions, they go down. The union's retiree health care benefit trust got the billions. The bondholders, for the first time in history, get 5 cents on the dollar if they were lucky. Now you have cities like Miami and states breaking their employment contracts and the bond programs. So what do you have? You have people saying, well, wait a minute, if our contract doesn't mean anything, what do bonds mean? All right, so you're out of stocks. Now you can't trust an American contract anymore. So what's the next step? After that, I guess it's real estate. I had a guy who owns a lot of real estate tell me once, he said, man, I used to think that land would always be worth something. I don't know. I don't know anymore. Well, you know how the real estate market's going with you, right? You trying to sell your house? Yeah, gone. Even NPR is reporting that there may not be much the federal government can do to halt the housing market slide. Well, what does that mean? It means what we told you. You can't pour all of this money because you'll never stop the slide. So all of that money is wasted. It's gone. Sales are now the weakest in 15 years. The commercial real estate bubble is bursting. I told you it would happen a year ago. It is coming now. Companies are increasingly just walking away from their properties because they don't have the money. And it's actually cheaper than paying the mortgage. So they just walk away. All right, stocks are unstable, contracts you can't believe anymore, real estate is still tanking, so then what? So then what? Treasuries. These two, this is not insane, this treasuries, that's the place of real safety. How are they doing? Well, I mentioned a minute ago that the Fed is looking to buy its own treasuries.